Hi, this is Mike Swanson of Wall Street Window. I'm speaking with David Skarica, who runs the website addictedtoprofits.net. We thought we'd do a stock market update as we begin the month of November. How are you doing today, Dave?
Good. Thanks for having me, Mike.
Well, it's been an interesting time in the markets this year. The volatility has been extremely low. And up until this point, what I was seeing were stocks that would be oversold, like they'd hit their 50-day moving average or something, and then they would just surge and they would kind of be the leaders. Started seeing a couple stocks. I'll show an example or two in a second that actually were breaking out the new 52-week, or they were just breaking out and doing really well. I'm just going to point out one. I want to show people what I'm watching too. But this is First Solar, and you can see it gapped up and it broke out of a little base there, and that's essentially a 52-week high on that stock. So that's something I hadn't been seeing until recently, where stocks are, except for the Nvidias and Facebooks. There's like a dozen or so stocks last week that did this, and they're not like the usual suspects. And I'll just point out one that I'm watching for a potential breakout because people like what we're looking at. This is a mining stock, but it's been consolidating all year, and if that could break 360, then it might be able to do something. And that trades as SMTS on the.
Actually, if you're going to be on this, I'll just show you one too.
Yeah, sure.
It's not really because I recommend this stock, but Mike and I have just invested like a pre-IPO in a weed deal, marijuana deal, and I know a lot of these marijuana deals are just little crappy penny stocks or something. But what's happening in Canada is Canada's legalizing marijuana for recreational use starting in July the 1st. So basically Canada Day, Canada's Independence Day, July the 1st, and next year. So of course they need all this supply, and they're now allowing into the marijuana to be imported, foreign. It's all got to be domestically produced. So they're starting to give companies the licenses, to produce this stuff for, recreational use, not just for medical use. So I think this is, and so what's great about that is they're actually, we'll talk about it in a second, but I went to this company's facility, not this weed, but this new deal we've invested in. It's called FV Pharma. And it's an old Kraft Foods plant. They have to have tons of security. You can tell that tons of money is going into this to make it done the right way. So these are going to be legitimate companies. They're not just going to be these little crappy penny stocks like we've seen so much. So this is the largest one in Canada. It's called Canopy Growth. It's traded under the ticker WEED. And what you can see is there was this breakout last year, and then this kind of big consolidation all year, and now it's starting to break out. And what I think is going to happen, regardless of what happens in the stock market, in a lot of these marijuana deals, is we're going to kind of like sell the news, meaning that we move higher into the first or second quarter, into that legalization, into when the big sales actually start. And then maybe they sell the news then. And of course, there'll be winners and there'll be losers. But this is kind of the same thing that you're talking about. Even though that Sierra is a mining deal, is that you got this big blow off last year, this big move up last year, followed by this consolidation. And now it looks like we're about to take out that intraday high of last November, and then probably move a lot higher into the first and second quarter. And again, the nice thing about this sector is, with it kind of being a new sector and it being something that is going to grow for many years, you probably can move higher in the sector even if there was some kind of correction or worse in the stock market in the short to intermediate term.
Okay, well, you're talking about two companies. One, the weed company, that's the symbol for it, and it trades in Canada. And then you mentioned one that both of us have actually invested money in. Neither one of us own weed, but the other one isn't trading right now. So that might make someone that's watching this wonder, if the weed stock just broke out, it looks like it's going to go higher. Why aren't we buying that one instead of the other one that we did buy?
Yeah, well, this is the CEO. This is a little article that was done in the Toronto Star, and there was another one done in the local paper. It's in a little town called Cobourg, which is near a larger town called Oshawa, which is just north of Toronto. And they have this gigantic facility. It used to be, like I said, a craft foods facility, and they're just going to start producing a small amount of weed. They got about 9-10 rooms for it now, and then they're going to expand, into these other ones. And actually, we should note one thing that's really unique about this company. I think personally is that especially because of the real estate bubble in Canada, and because it's for security reasons, a lot of these weed companies and marijuana companies tend to be in the middle of nowhere. Like they have these plants or whatever, they're growing in the middle of nowhere, far away. This thing is only an hour away from Toronto. So when the big demand starts under legalization, they're going to be able to call this company up and say, hey, we're out of marijuana. You got to send us more. And we'll just be like, this plant will be like an hour away, which gives it a really strategic positioning, advantage to the other ones. Yeah. So this company's going to have approximately 300 or 400 million shares outstanding. What they're doing is structuring it almost like an Australian company. For those who don't know, what happens in Australia with these junior mining companies, these companies aren't like the junior miners that we have here. These companies have hundreds of millions, maybe even 1 billion shares outstanding. And then these penny stocks that trade a lot of volume. They're very liquid, but they're like 10 cent, 15 cent stocks. So this company is kind of structuring itself like that, where it's going to have a big float, but it's going to have a big retail following. And then it should trade quite a bit as well, right? So yeah, I think that this thing will come out and then do quite well afterwards. One of the biggest retail brokers in Canada who has a lot of clients is actually one of the biggest backers of the company, et cetera, et cetera. So, and like for me and you, because people know us as perma bears, to actually be excited in something that's outside of, say, the mining sector is kind of exciting,
Well, my views on the market have changed a little bit. I mean, last year, right after the election, I was 100% long. Like the day after, I just bought, and sold most of what I bought in the summer. But I mean, I still got long positions, still 40% invested long. But I don't think, we have an imminent decline in the market coming. And it looks like we're going to see, thanks to Trump's tax bill, a likely surge in buybacks thanks to money coming back in the United States. So I do think the market's highly valued. It's one good day going to go in the crapper, but I don't see any sign that that's right around the corner in any immediate sense. So I don't have any problem, buying stock.
In terms of the stock market, that's the biggest key component of all the tax cuts. It's not what's going to happen to the middle class person. It's these corporate cuts. It's not even the corporate cuts. It's actually what's going to happen with this repatriation of funds. So for people who don't know that right now, when you repatriate money, you have to pay the full corporate rate, 35% on it. So Google, Apple, these companies that have a huge amount of money overseas, usually in Ireland, because Ireland has a low corporate tax, they just kind of leave the money there, whatever, collect their interest or use it for foreign takeovers or foreign, investment, and the money just sits there. So what they're going to essentially do is put a tax on that foreign money and then give a tax holiday to that money when it comes back to the state. So instead of paying the 35%, let's say they even cut the corporate rate to 20%, they'll tax it at like 10%. And then but what they'll do when it comes back, what they'll do is they'll put a tax on the money if it's sitting there in the bank account. Like they may tax it at 10% a year. So a company like Apple's going to say, well, like, look, we got hundreds of billions sitting in this account in Ireland. We're not going to, we're not going to pay a 10% tax on that. We're just going to rather pay, say, a 15% tax. And remember, that 10% will be per year. Like, why would we pay 10% per year rather than just bring it back and pay a 15% tax, kind of a one-time thing? And I think they'll have a time frame of when you can bring this money back. And most of that money is going to be used for stock buybacks. It's not going to be used for investment. Cohen, the Treasury Secretary, it's Mnuchin, but Cohen is Treasury Secretary. But Cohen has basically said that he doesn't care if companies use that to buy back stock, and that's what's going to happen. And let me give you an example of what has happened. Activision, if you remember, they did a takeover The stock actually looks toppy here, just to look at the chart. But they did a takeover of that company that makes that Candy Crush. King, I think it was King World or King Games or something like that. They were out of Ireland, and Activision did it with the money they had sitting in a foreign account. And what they said was, well, we rather just put this money to work taking over someone than, you know, bring it back to the States and pay that 35% tax on it. So this is kind of going to end a lot of that. And this money will come back to the States. But again, it's not going to build plants. It's not going to build factories. It's going to buy back stock. So you look at the big multinationals. I showed you Apple and Google. You know, they got a ton of money offshore. But 3M, Boeing, all of the other big stocks that have money offshore too. And you see 3M really spiked on its last earnings. They're just going to continue to buy back stock now, probably for the next 6 to 12 months. And I think that even if you get a correction in the market, that could hold it up, and it could hold it up and probably cause this final blow off that me and you have been waiting for, because you're going to see this huge influx of money going in vis-a-vis share buybacks.
Yeah, and I remember after the election in December of last year, the CEO of Cisco, he was on CNBC for an exclusive interview, and he said that he's got like close to $1 billion. It was hundreds of millions of dollars at least of money offshore, and he's ready to bring it back into the United States. And they said, "What are you going to do with it?" And he said, "Share buybacks." He said, "I'm not going to invest in plants. I'm not hiring new people. I'm doing share buybacks." And they said that was wonderful on CNBC.
Well, this guy from Cisco, excuse my language, he's such an asshole, right? I think that's what I believe about him. He actually tried to spin it. It was good for the average person. I saw that interview you were talking about, because he said that, you know, average people own stocks in their pensions. So, you know, of course, then Cisco's price goes up, and then people own in their pensions and they indirectly benefit from it. And I'm thinking to myself, like, you're just doing that to please the hedge funds that own your company, and so you can make money in your stock options. You don't give a crap about the average guy, but that is actually how he spun it on CNBC. And the way I view this, Mike, is what's going to happen. This is like the ultimate max out of your credit card, or the ultimate kind of like pump and dump in a stock. You know, pump and dumps are usually in small penny stock companies. In that, look at your own life. If all of a sudden, if you could get all the equity of your house, all maxing on all your credit cards, you would live like a king for a year, right? You could take first-class flights. You could go to Italy. You could go to any place in South America or Australia or wherever you wanted to go. But then after that year, all you're going to have is you're going to be maxed out in debt, and you're probably going to go bankrupt. And that's the way I'm viewing these buybacks. This is kind of like maxing everything out, flushing all this money into the stock market. And then when the money is kind of gone, that's it. It's over. These companies, all they have is debt and a bunch of shares they bought back.
Well, there's an interesting study I read from the Harvard Business School where they looked at buybacks and asked, what does it do for companies in the long run? And there's absolutely no correlation between a share buyback program and what a stock is going to do in 3 or 4 years from now. They were saying all it does is help it go up in the short term, which has nothing to do with what it might be like in a couple of years. So, you know, the buybacks may help, or they should help next year. But, you know, 3 or 4 years from now, it'll mean absolutely nothing. Like there's massive buybacks in 2006, but, you know, it didn't prevent the stock market from falling in 2008.
Well, the perfect, actually, there's two examples. As I remember, there's an article, you can find it on the internet, on Win, and it's one of these, it's either, I don't want to point out a site, but it's either like a Zacks or what's that other one? You know, it's one of those sites where people write about stocks. Sorry, it's just slipping my mind right now. And part of the argument of buying Win was that Win had this huge buyback going on. Well, of course, Win collapsed from over $100 a share to like $10 a share in the financial crisis. I'll find this article. I can post it at some point. But I remember specifically Seeking Alpha. It was either Seeking Alpha or Zacks. It was one of those two where there was an article on Wynn doing these buybacks. That was part of the reason he wanted to own it. And the stock falls 90%. And the classic example is you go look at Papa John's. Disclaimers, I have put options on this company. And by the way, I had puts before it fell here. It's been one of my big short plays. And what's funny is that Papa John's, I'm not even short because of the NFL stuff. I was short because this company has basically zero growth. And they're just growing their earnings by buying back stock, taking on debt, destroying their balance sheet. So
how does that grow earnings?
Well, because what it's really simple. It's not earnings, but earnings per share.
Oh.
So if you make the same amount of money, but you have less shares, let's just make it really simple. If you have 60 million shares out and you make $100 million, you make 167 a share, right? Well, if you buy back and now you have 50 million shares out, you're making $2 per share. And a lot of these guys' compensation isn't even linked to stock performance. It's linked to if they can hit their earnings numbers. So if you can hit your earnings by buying back stock and shrinking the number of shares outstanding, it's great for these managements that have compensation that are linked to that. So any Papa John's back here in August, they announced two things. They're going to start selling pizza on Facebook. So you can go to the Facebook page and just order it right off that. I don't know who the hell would go to Facebook to order pizza, but whatever. And then they were also doing a big increasing the share buyback. So the stock had this huge gap up. Even though the earnings weren't even really good, there wasn't a lot of growth. And then it kind of just trended lower. And I think you can see here that last week of September, that's about the time these NFL protests started hurting the NFL ratings and stuff. And that gave me even another reason to be short, on top of the fact that I thought this was a garbage company and they weren't growing it, their earnings, and they sell a bad product. I think the pizza's bad too, right? That this was even more so because this is the biggest. I think all the pizza companies have some kind of sponsorship deals, but this is really the NFL pizza company. Peyton Manning is one of the spokesmen. J.J. Watt, who plays for the Houston Texans, is another one of their spokesmen. So this is a company that's very linked to the NFL. So I knew that would really hurt it as well. And they had horrible earnings, and they decreased their estimates going forward. And you can see this big gap down here. But this is the classic example as how this buyback in the short term can maybe pump the stock. But if you don't have the good fundamentals, you're not growing anything, you can essentially, it's not going to help longer term. And that's probably what's going to happen when these companies do big buybacks, is it's probably going to help them for a little while. And then at some point, everything will kind of roll over again. And the thing is, too, Papa John's has been doing, this is the weekly chart, huge buybacks for years. So what do they have to show for these buybacks? Now they have a huge amount of debt, and all they were doing is buying stock at $70, $80, $85 a share, and now the stock is 60, right? So it's a total waste of time.
Yeah, but was the CEO selling his shares at the high prices?
He was selling a ton. I have a friend who builds houses in Naples, Florida, and he just told me that every 5 or 6 years, this guy would do a huge expansion on his house in Naples, Florida. I'm not going to say the amount because I don't need to get sued. But, yeah, he's selling his shares and doing that, right? Riding around in private planes. Great guy.
Well, he seems like a nice guy in the TV commercials.
Well, it's kind of, I think, his facade, right? That he's the everyday guy eating wings and pizza, while he's using the company's money to buy back stock and dump his own shares. It's kind of the way, the corporate world works. I
read an article written in the 1990s, and it was about that stock and saying it was doing accounting gimmicks, and the stock actually had a horrible collapse back then. So maybe it's something that repeats every 10 or 20 years of this thing.
Yeah. Well, he's the founder, and I've seen that article that you're talking about. So if he's up to shenanigans, then there's no reason that he can't keep doing that, just in a different way. Maybe instead of accounting, now he's using cheap money to borrow money and buy back stock and inflate earnings that way. And another thing too, I should notice there was a big gap down in Papa John's 2 years ago in 2015. You can see in that chart, the stock fell about the same price, from about 70 to about 50 to 55. And what's interesting about that is he's blaming the problems in the company now on the protests in the NFL, saying that trickling down to less people watching games, less people buying pizza. But what's interesting is his stock did the exact same thing 2 years ago before all that. And by the way, 2015 was the record money viewership ratings year in the NFL. So you can see it didn't exactly help him then, right? So
was there bad news back then about it?
I remember what happened then, because I was actually short the stock then. I think what happened back then was they were trying to do expansion into China. Now, granted, they grow, by the way, they're growing way faster overseas than they are in the States. They have almost no growth in the States, but their overseas growth numbers are not bad. And but of course, China would be the huge market to break into. And for whatever reason, it just didn't work out. And they silently kind of closed all their operations in China. And then I think what happened is that's when they started this buyback strategy, because the idea was, okay, we can't get growth now because the Chinese expansion didn't work out. So the only way we're going to kind of grow earnings, be able to inflate the stock, be able to inflate our stock options, is by doing financial engineering. Like, this stock has been incredible. Basically 20 or 30% of all the money this company has ever borrowed, so this is going back the decades and decades this company has operated, has occurred in the last about 2 years. So they have just gone on a borrowing and buyback spree the last 2 years.
Oh, I think I remember what happened now. They were saying a couple years ago they're going to expand into China, and 2 years that was a failure. That's what I wanted. I think that's what happened.
Yeah, look, I'm just going to show you the financials right now on it, just to quickly show you what we're talking about. And this is kind of a microcosm for the whole market. Like, I don't want to beat up on Papa John too much, because he's so you can see right here, this is like here, sales or purchase of stock. So minus would mean that you're actually buying back your own stock. And you can see almost every year he's buying back 110 to 115 in stock. And if you go here, 1 second.
That's
net borrowings, look at the huge increase. They borrowed almost 70 million in 2014, 25 million in 2015, and 44 million here. And they have even a bigger debt issuance this year. So you can see what they've done is essentially they are just borrowing money and doing these big stock buybacks, et cetera, et cetera. And note that in 2014, 2015, that's when the stock did well. They did have a big jump in revenue in 2016, but in 2014, 2015, they had virtually no increase in revenue, and that was when the stock basically kind of rolled over.
Well, right now you're kind of eyeing, I think, your biggest, what's the biggest trade you're eyeing right now for the rest of the year?
Well, really, I changed my philosophy. Just like we were talking, we both got long after the election. I've kind of changed my philosophy after this fall, because I figured if the market did decline, it would happen in that kind of September to October period. That's when all these crashes, 29, 87, 37, that's when they all happen. So now that it hasn't happened, I'm essentially buying these little deals like this Pharma FE that I talked about. We've got a copper gold deal called, I'll give the name of it because you can't buy it unless you do the private placement right now, called Northern Fox. I'm actually working for that company too. So disclosure is, I'm getting some kind of compensation package as well. So these are I'm buying or working for companies like these, and then just using put options as a hedge. So, I've got pizza has been my most successful one. I have other puts that just expired worthless because, the market keeps going straight up. But that's essentially what I'm looking for. I'm looking for stocks to short and hedge with. And then I'm also buying kind of these seed financing deals right now. Because and I experimented with that, by the way, in the last year. I did about 4 of these deals, and 3 of them turned out pretty good. Only 1 didn't really do anything. So now that I saw kind of this philosophy works, I'm kind of doing that going forward. So I'm just going to buy these small companies and then hedge the position with put options. Like, for example, we're doing this copper deal. So what I might do as a hedge is I might look at shorting something like Freeport-McMoRan, right? That's the biggest copper producing company in the world. So you might look at, okay, if copper stays at $30, or sorry, $3, this copper deal should do well that we're investing in, this and that. So let me take a few percent of the position, and then put that in put options at Freeport. And if copper tanks, like it did in 2015, you can see here the stock went from 20 to 3 or $4, then you're going to make money off these puts in Freeport, doing kind of hedging strategies like that.
Well, if someone wants to, someone watching this, can they buy these stocks? Or should they?
Yeah. Usually you have to be a accredited investor, but for the nice thing about doing a seed financing is usually you fall under the family and friends rule. So say I'm associated with the company. Well, then, you know me, I'm your family and friend, and then you kind of you don't have to be accredited to do that. And that's what most seed financing tend to fall under the family and friends rule. And they'll have it right there in the documents saying if it's the family and friends kind of thing. So yeah, most people can participate in these things that they're accredited, or like I said, in the case of the seeds that are doing the family and friends that fall under that kind of designation. And the thing is too about these seed financings, a friend, Doug Casey, the famous investor, once told a friend of mine that you never say no to one of those. And the reason being is you buy a 5 or 10 cent financing, usually most of them are going to come out 3, 4, 5, 6 times where you bought it, even if it's not a good company, right? So it's just almost like you're being a venture capitalist on a smaller scale, and you're just buying a whole bunch of these things thinking that 1 or 2 will really pan out. Probably half of them won't pan out. A couple might be a disaster, but a couple will, if they really do well, you're going to, that's where you're really going to make your money.
Yeah, and I would just say, people listening, go to your website, addictedtoprofits.net, subscribe to your service, your email list, contact information is on there also.
Yeah, and I also have a discounted rate on what I call a lifetime membership right now. And essentially what it is, it's really for people who are interested in these financings. So usually I charge $2,500 for it. Right now I'm charging $1,500. And if you write me at addictedtoprofits@hotmail.com, I got even a further discount if you wire me the funds, because wire goes right in my bank account, makes it the easiest thing for me to do. So and that essentially is just going to give you first access to some of these seed financings if you're interested. And the reason I want to do that is by putting up first of all, I'm moving to a monthly billing system where I'm going to charge $70 a month, or between $70 and $100 a month. So if you do the $1,350, you're essentially getting a 1 or 1.5 year subscription for for the lifetime of it. But more, you're getting access to the seed financings. And another reason I'm doing that is at some point, like we saw, Mike and I got into some of this marijuana deal. They sold out so fast, I couldn't get any of my subscribers in. Mike and I were barely able to get in, and that's it. So at some point, when the gold and commodity sector is hot again, this stuff's all cyclical. Probably these financing will sell out just as fast, and these people that are kind of on this lifetime / deal list access, they're going to go to the top and basically get the first access. And I don't know, when these things are hot, probably those are the only people they're not going to be able to get in, not just even the regular subscribers.
Well, you mentioned gold and copper and stuff, and we both are bullish on it, but at this moment, it hasn't done much this year. Gold went up above like $1,350 and then came back down, and people like Harvey Dent are calling for a complete collapse. What's your argument against that? He said it's going to go to like 500 an ounce or something.
Well, my argument is I really think that now the Fed is Trump has put Powell in the Fed. You're going to see an even more dovish Fed post at this next December rate hike. I wouldn't be surprised if Powell only raises rates maybe one time next year. So Trump is putting in, quote unquote, his guy. And I think we're going to see the effects of that. Trump wants a lower dollar, and that essentially will help gold. And if you kind of get this blow off and then decline after this last buyback crap happens, with the repatriation of funds, that could also, and you're seeing it here in the bond. Even though everyone's talking about raising rates, look how well the bond is acting, right? The bond's up year to date, and you can see the TLT had a great week this week. So I would think that at some point, with this obviously probably more Fed that's going to be even more dovish, and then maybe a potential for decline in the second half of the year next year in the stock market, that would really, really help gold. Now, with copper, look, copper's a little more economically sensitive, but obviously, again, a weaker dollar would help copper in the short intermediate term. I got to admit, if you get a sell-off in the stock market, that might hinder copper. But look at the early 2000s, right? If you've got the Fed cutting rates and the dollar weak, even if the global economy softens a bit, that kind of reinflationary trade could prop copper prices up as well, regardless of what happens in the markets. I mean, the stock market.
Well, I wouldn't want to keep you too long, so I don't really have anything to add myself. It's the weekend. If you've got anything you want to say before we take off, go ahead.
All I got to say is I just think that this new strategy that I have, buying these kind of pre-IPO C type deals, and just so you know, like, this is where we are at Advantage. You don't get access to these deals just probably as a private individual. You have to know someone like us because I used to go to all these mining shows and I traveled around for 15, 20 years. So it's kind of like that access to those deals and knowing these people in the industry, gives you that access. So just buying stuff like that with these put options as a hedge is really kind of the way I'm going to trade going forward. And also the last thing I'm going to do as well is I'm going to show you just a stock that's working for us this year. I'm looking also, if you're just someone who's interested in trading, forget about the deals. I'm looking for stocks like Bida last year. So this stock you can see was basing between about 17 and about 30. And it had just collapsed from over $90 a share. And I did a straddle trade on this where at around $20 a share, we bought $15 calls and we bought $25 calls and $15 puts. And you see this year was a huge move this year. The stock went from 20 to almost $50 a share. So that's also what we're doing as well. I'm looking for stocks that just have a huge move in either direction. So let's just say you bought those $25 calls. They were $2. Well, right now they'd be trading at about $23. So even if your puts went worthless, you made about 5 times your money on this trade, right? So that's what I'm looking to, is for stocks that I think can have a big move in either direction. And mostly I'm not looking for the hot stocks like a NVIDIA or a Netflix. I'm looking for beat up companies like this because, for example, this year, this stock has outperformed. This stock's up 100% this year. It's better than NVIDIA. That's better than Netflix, right? So I'm looking for stocks that can have a huge move in either direction and using the straddle thing. And the concept is if the stock goes up a lot, you're not going to care about the puts because you're going to make a lot of money in the calls. And if you get some kind of market collapse and the premium in the puts blow up to the upside, you're not going to care about the calls because you're going to make so much money in the put. So that's also what we're doing on top of doing the deals, which are hedged by put options.
Well, thanks for taking the time to talk with me and everyone else. We'll do another video soon.
Yeah, thanks for having me, Mike.